Welcome to the deep dive. This time we're going to be digging into Infosys.
Infosys, yeah.
You sent us a ton of stuff on them.
We got a lot of great sources for this one.
Press releases, financial reports, even some internal documents. It's impressive.
Yeah, it's be interesting to see what we can glean from all this.
Definitely. So we're talking about a major player in the tech world, right? Infosys.
Right? Yeah, global powerhouse.
IT services, digital solutions, they do a lot.
Constantly in the news, too. Always some new development or acquisition.
So these sources we got, they give us a really unique snapshot of where they're at right now.
And where they're headed. That's the exciting part.
So where do we even start? I mean, they've been making some big moves lately.
Well, the one that jumps out at me right away is their acquisition of Intech Holding GmbH.
Intech Holding GmbH, that's a mouthful.
It is a bit of a mouthful, but it's a really interesting move for them.
Okay, break it down for me. What's so interesting about it?
So Intech, they're a German company.
Okay.
And they specialize in engineering R&D services.
Engineering R&D, very specific.
Right. Not your typical flashy tech acquisition.
Yeah, it's not like they bought a social media platform or something.
Exactly. But that's what makes it so telling about their strategy.
Okay. I'm intrigued. Tell me more.
Think about it. The digital engineering space is blowing up right now.
Automation, AI, all that.
Yep, the Internet of Things. And Infosys is making a clear play to be a leader in that space.
So they're not just trying to keep up, they're trying to dominate.
Exactly. They're playing the long game.
I like it ambitious. But let's talk money for a second, because this acquisition, it's not cheap.
Right. And there's that interesting detail with the contingent consideration.
Yeah, 30 crore rupees, something like that?
30 crore, yeah, which comes out to roughly $3.77 million.
Okay, so what's the deal with this contingent consideration thing?
So basically it means the final price tag isn't set in stone.
Oh, interesting.
Infosys is saying, hey, we'll give you this extra amount, but only if Intech hits certain performance targets.
Ah, so it's like an incentive built into the deal.
Exactly a way to keep everyone motivated and protect their investment.
Pretty savvy, if you ask me.
Definitely a sign that they've thought this through carefully.
Makes you wonder what kind of targets they set, though, right?
Right. And how confident they are that Intech can reach them.
That's like a whole other layer to this whole thing.
For sure. It'll be interesting to see how that plays out.
Absolutely. All this talk about acquisitions and investments makes you wonder, though, how's Infosys actually doing financially?
That's the million-dollar question, isn't it? Can they back up these big moves?
Right. Are they just throwing money around, or are they actually in a good place?
Well, let's look at the numbers, because the financial statements, they paint a pretty interesting picture.
Okay, hit me with the highlights.
All right, so for the 6 months ending September 30th, 2024, their revenue growth sits at 4.4% year over year.
4.4%. Not exactly setting the world on fire, is it?
You have to keep in mind the context, though.
Good point. What's the context?
The global IT services market, it's incredibly competitive.
Oh, yeah, for sure.
Yeah.
Everyone's fighting for a piece of the pie.
Exactly. So in that environment, 4.4% growth, it suggests stability.
Okay, so it's not about being flashy. It's about slow and steady wins the race.
Exactly. They're holding their own against some very tough competition.
All right, that makes sense.
Yeah.
What about their operating margin, though? Are they actually making money from all this growth?
That's the key, isn't it? And the answer is yes, their operating margin is a respectable 21.1%.
21.1%. So they're keeping a decent chunk of their revenue after covering costs.
Precisely.
Yeah.
Which means they're managing their expenses well.
Always a good sign.
Absolutely. Especially for investors.
Investors love to see that efficiency. But what about the cold hard cash? Do they have the reserves to back up all this activity?
This is where it gets really interesting. Their free cash flow for the period was a whopping 16,165 crore rupees.
16,000 crore rupees. That's got to be like billions in dollars.
Close to 2 billion to be exact.
2 billion with a B. Now that's what I call financial firepower.
They're not just surviving, they're thriving.
All right. But we can't forget about the investors who want to see that bottom line.
Of course, earnings per share, the metric everyone's watching,
What's the verdict?
up 5.8% year over year.
So they're delivering value to their shareholders, too.
It seems that way.
Okay, so we've got revenue growth, healthy margins, strong cash flow, increasing earnings per share. Sounds like Infosys is firing on all cylinders.
You've just got a lot going for them.
But there's always a but, isn't there?
There's always a but. Even the shiniest financial statements can sometimes hide underlying risks.
Oh. What kind of risks are we talking about here?
Well, remember that cybersecurity incident involving McCamish?
McCamish. Ring a bell. Refresh my memory.
Right, they're a subsidiary of Infosys, specialized in retirement services technology.
Okay. Yeah, I remember now. They got hit with that ransomware attack last year?
Exactly. And it turns out there might be more to the story than we initially thought.
Really? What's going on?
Well, the financial statements we're looking at, they actually mention some potential costs associated with that incident.
Costs, like, what are we talking about? Fines, legal fees?
It mentions legal proceedings and indemnities,
Hmm.
which means McCamish and by extension Infosys could be on the hook for some hefty payouts.
Oof, that's not good. So this ransomware thing, it's not just a tech headache, it's a financial headache too.
Yeah, you don't mess around with cybersecurity these days.
Especially when you're dealing with sensitive information like retirement accounts.
Exactly. Infosys prides itself on reliability, security, and this McCamish situation, it puts a dent in that image.
Reputation is everything, right? Once that trust is broken, it's tough to earn back.
Tough and expensive. And we're not just talking about the immediate costs of this incident.
Right. There's the long-term impact too, how clients perceive them going forward.
Exactly. Will they be hesitant to trust Infosys with their data?
That's the question, and it's not an easy one to answer.
It's a risk they have to manage carefully.
For sure. But you know what's interesting? In the middle of all this, they're still making these big moves with acquisitions, especially in digital engineering.
It's like they're trying to predict the future or maybe even create it.
Yeah, they're not just reacting to the market, they're trying to shape it.
Exactly. And that's where the Intech acquisition comes in. It signals a shift towards a more digital future.
It's a bold move for sure, but it does make you wonder, are they spreading themselves too thin?
It's a valid concern. They've got a lot on their plate right now.
They're juggling acquisitions, dealing with this McCamish situation, all while trying to stay ahead in a rapidly changing industry.
It's a delicate balancing act
No doubt about it. But
Mhm.
hey, that's why we're here, right?
to try and make sense of it all.
Exactly. So what else is jumping out at you from these sources? Anything we haven't covered yet?
Actually, there's this one detail I found buried in the financial statements. It's not exactly front page news.
Oh, you know, I love digging into the nitty-gritty. Give it to me.
So they mentioned something called the Special Economic Zone Reinvestment Reserve.
The what now? That's a mouthful.
Tell me about it. But it's worth understanding because it gives some insight into how Infosys operates in India.
Okay, I'm all ears.
So basically, Infosys sets aside a portion of its profits earned in special economic zones within India.
Special economic zones, what are those?
Think of them as designated areas with tax benefits and incentives to encourage economic activity.
Ah, so it's like a way to attract businesses to certain regions.
Exactly.
Yeah.
And Infosys being a major player in India, they benefit from these zones.
Okay, so they get a tax break, but then they have to put that money back into those specific zones.
You got it. They can't just pocket the savings.
Interesting. So it's a way for the Indian government to ensure that these tax breaks actually result in tangible economic development.
Precisely. It's
Oh.
a win-win situation in theory.
Right. Infosys gets tax benefits and the government gets to boost growth in targeted areas. But how does this impact Infosys's overall strategy? I mean, it sounds like it could be a bit limiting.
That's the thing. On the surface, it might seem as a constraint.
Like they can't use those funds for whatever they want.
Right. They can't just use it for share buybacks or dividends or even acquisitions outside those zones.
So it's like they're playing with house money in a way.
In a way, yes.
Yeah.
But here's where it gets interesting. This reserve could actually be a strategic advantage.
A strategic advantage? How so?
Think about it. This reserve gives Infosys a dedicated pool of funds that they have to invest in these special economic zones,
Okay.
which means they can accelerate their growth in those areas, taking advantage of the tax benefits and potentially gaining a competitive edge.
Ah, so it's like a built-in growth engine fueled by tax incentives in a rapidly developing market.
Exactly. It's a clever way to leverage government policy to their advantage.
Very clever. But it does raise questions about their global ambitions, right?
It does. How do they balance this focus on specific zones in India with their global expansion plans?
It's like they're playing a game of chess on multiple boards simultaneously.
And each move has ripple effects across the entire board.
This is getting really interesting. We've talked about their financials, their acquisitions, their cybersecurity challenges, and now this whole economic development angle.
It's all connected.
It really is. And speaking of connections, let's talk about their employees for a second.
The heart and soul of any company, especially in the tech world.
Exactly. We touched on their employee stock options earlier, but what else can these sources tell us about how Infosys manages its workforce? Right? We talked about how they use stock options to incentivize their employees, but it sounds like they're doing even more than that.
Oh, yeah. They're definitely not just relying on the standard playbook.
So what else are they doing to attract and keep top talent? Because let's face it, in the tech world, it's a dog-eat-dog world.
Tell me about it.
Mm.
Everyone's trying to poach the best engineers, the best developers.
Exactly. So how does Infosys compete?
Well, they've been getting creative with their compensation packages.
Oh, okay, like what? What kind of creative stuff are we talking about?
So on top of the stock options, they're offering performance-based bonuses.
Okay, that's not totally unheard of.
True. But here's the twist. These bonuses, they're not just tied to individual performance.
Oh, interesting. So it's not just about how well you do in your own little bubble.
Exactly. They're linking it to the overall success of the company.
So if Infosys does well, everyone benefits.
Exactly. It fosters a sense of shared ownership, shared success.
I like that. It's like they're all in it together.
Precisely. And that's not all.
There's more. They must be serious about keeping their employees happy.
They're pulling out all the stops.
Mm-hmm.
They've also been investing heavily in employee training and development programs.
Smart move. The tech landscape is constantly changing. Got to keep those skills sharp.
Exactly. And they're focusing on the areas that are most in demand right now, things like AI and cloud computing.
So they're making sure their workforce is ready for the future.
Exactly. They're investing in their own future success by investing in their employees.
It's a long-term strategy, but it seems to be working for them.
It does. And it ties back into everything else we've discussed, their financial health, their strategic acquisitions. It's all connected.
It's like they've got this well-oiled machine going on.
Well-oiled might be a bit of a stretch.
Okay, maybe not well-oiled, but you get the idea. They've got a lot of moving parts, but they seem to be managing them effectively.
They do. And that's what makes them so fascinating to analyze. They're not afraid to take risks, to try new things.
And sometimes those risks pay off big time.
Exactly. But it's a delicate balance, right?
Mhm.
Because with great risk comes the possibility of, well, not so great outcomes.
Always a gamble. But that's the nature of the beast in the tech world, isn't it?
Absolutely.
Yeah.
Things change so quickly. What works today might be obsolete tomorrow.
So you got to be adaptable. You got to be willing to pivot.
Exactly. And that's what we've seen from Infosys throughout this entire deep dive.
It's been quite a ride, hasn't it? We've covered so much ground.
We've gone from dry financial statements to uncovering a company at the forefront of technological innovation
Navigating a complex global landscape.
and facing challenges head on.
This deep dive into Infosys has been eye-opening, to say the least.
It really has. And while we've learned a lot, I'm left with one final thought-provoking question.
Oh, I do love a good thought-provoking question.
Lay it on me.
In this ever-evolving tech world, can a company like Infosys, with its roots in outsourcing and IT services, truly cement its legacy as a global tech giant?
That's the million-dollar question, isn't it? Can they keep up with the Amazons, the Googles, the Microsofts of the world?
Exactly. Can they maintain this momentum, this drive to innovate and adapt, or will they hit a ceiling?
Only time will tell. But one thing's for sure, it'll be fascinating to watch it all unfold.
Absolutely. This is a company to keep your eye on, folks. They're just getting started.
So what stood out to you most from all of this information? What questions does it raise for you about Infosys or even the tech industry as a whole? That's something to ponder as we wrap up this deep dive. Until next time, keep those sources coming.